Welcome everyone. Today I want to share with you this simple and most important strategy when it comes to trading. And I'm seeing many people talking about it, but none of them are using it properly. So as you can see on this Bitcoin price action, I've drawn so many channels. And the reason behind this is pretty simple, because if you can identify the channels, either it's a downward or upward channel, you can use it for your benefit. So for example, right now, when the price was making an upward channel, higher highs, and as soon as the support line was broken and the trend actually started making lower lows and lower highs, there was a new trend, price going in a downward direction. Same here, right? When the lower channel is formed, it makes lower lows and lower highs. As soon as it broke the resistance line, it started going in an upward direction. But as soon as it started making lower lows and lower highs, again, the trend has changed. So this is pretty simple, right? For example, here, you can even draw a trend line here. It's not a big deal, right? So if you take from this area and here, let's make it this way. So now you can see we are actually creating or making higher highs here as well, right? Higher highs and higher lows. So this was an indication that the price has now reversed and going in an upward direction because it's an upward channel. So now, as soon as the price actually started making lower highs, it could have made here, right? But it started making lower highs. This was an indication that trend might possibly change. And same thing happened. The trend actually started going in a downward direction, making lower lows and lower highs, guys. This was very important to understand. And you can see in a bigger picture, the falling wedge. The falling wedge is very important to understand because this falling wedge indicates the breakout. It could be either in downward direction or in an upper direction. So for example, in this one, as soon as it broke the upper line, the resistance area, it started going in upper direction, right? This is a small breakout, I would say. But as soon as it started making lower highs and lower lows, we knew right exactly that the trend is now going to reverse and it's going to continue in the opposite direction, not in the upper direction. So, and same here, guys, as soon as we broke the support area where the price was actually getting support and bouncing back, right, it fell off really hard. Then we went in a sideways. It's also called a horizontal channel when the price actually starts going in a sideways direction. So this sideways direction, or this the falling or the rising wedge or the rising channel, it's really interesting to understand because this sideways channel or the rising wedge or falling wedge could be very profitable because every time when the price comes around this support area, usually buyers enters and sells when the price comes around this resistance area. Same here, also in the downward channel, they buy when the price actually come around the support area and sell around when the price is coming around the resistance area. So this is pretty simple, right? Because guys, if you look at this current price, when the price was going in a downward direction, as soon as we broke the support area, price went even lower. And then here we made a falling wedge. And when the price actually broke the resistance line of the falling wedge, that's an indication of the breakout, right? And there was a really nice breakout when the price actually went from like around 7,000 area to almost like 11,000 area. And that was a really nice breakout. And also when you see the upward channel, we were making higher highs and higher lows here, right? Higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. Same way, like, and as soon as when the trend actually started making lower highs and lower lows, it indicated now and also broke the support area, we knew right away, okay, now the trend might possibly change from here on. And it happened that, guys, the price actually came around, tested the support area as a resistance again, and then it went down. Same here, it started making higher highs, higher lows, higher highs, higher lows. But as soon as the trend was broken, the support of the trend, price went directly in a downward direction. Same here, the price went in a sideways direction, indicating of a horizontal channel, and as soon as it broke the support area, price went down. So on my previous video, I actually stated that the price of Bitcoin might possibly go in a downward direction because the trend was not strong enough to hold the price. Because you can see, right, the upward channel, when we started making higher highs, higher lows, here we had a big gap and also made a lower highs, indicating that the buyer were not around this area. So we had a huge gap here, and also our volume was actually decreasing when the price was around this particular area, indicating that the buyers were weak. And now, as soon as we broke the trend line, the price actually fell almost like 7 or 8% today morning. But now the $1 million question, guys, this is very important to understand, because I've seen lots of people talking about it, but no one is properly implementing it on trading. And this is very important. You have to learn this if you want to master in trading. So let me start with this simple example so that you understand, right? Let's say if you believe that the price of Bitcoin is going to go downward from here. This is just an example. So what we can do is we can take the Fibonacci retracement level from swing high to swing low, right? So that we will get some Fibonacci retracement level as our target area. So let's say we are shorting from this area. Let's click there, and now you need a stop loss area and your target area. Our target area is probably going to be the 0.5 area, since the price likes testing this particular area, right? So let's go to the 0.5 area. This is our target area. And now stop loss is going to be somewhere around this particular area. Let's say here where the trend line actually broke. This stop loss must be based on the technical analysis. Please keep that in mind. This is just for an example. So let's say now you can see your risk reward is 3.65. You're entering, price is 6,219. Let's make it easier. Let's make it 6,200. Your profit price is 5,400. 400. This is where you are going to exit the market, and this stop loss is going to save you if the price actually goes against you. So 6,439. Let's say 6,400 is going to be our target area. So now you can see our risk reward is 4. And now if you are ready to invest, how will you calculate your risk? So as a trader, you have to know how much risk you are willing to take per trade. I suggest everyone not to take more than 2% of your portfolio. So 2% on a trade. So you are not investing more or risking more than 2% per trade. So this is very important to understand. And I also suggest everyone to use 2%. It's completely fine. So let's say you want to enter the position here. So let's say you have $1,000 to invest. Let's add $1,000. And as I said, we are not risking more than 2%. 0.02, that's 2%. So we are risking $20 per trade. So if this trade goes against us, we are risking only $20. But how to use it properly? We have seen people talking about it, right? But how should you use it properly now? So now let me show you how you can do it properly. Now we know that we are risking only $20 if your stop loss gets hit, right? So now we have to place this order. For example, let's go to Binance. This is just an example, guys. So you can see here, I've given the stop limit price on the amount, how much I'm going to invest. So as we said, we are risking 2%, that's $20. Now, how much money is required to place the trade? What you can do is just take the $20, that's the 2% out of 1,000 what we are investing, right? And only risking 2%, that's $20. Divide that by the stop percentage, which is 3.23%. So divide by 323. So now we need $619 to place this trade from $1,000. You have some leftover to place other trade as well. Now 619 is required. Keep that in mind. Okay, guys. So let's see here. Let's go to Binance. And now, as we said, total amount what we are using is 619. Just give it here, 619. Our stop limit was at stop was 6,400. Our entry price was 6,200, right? So our stop loss 6,400. Our stop loss, our entry price was 6,200. And now we said we only need 619, right? So now you can see we need 0.099 Bitcoin for this trade. So now if you place the order and say now we are going shorting market from here, if this trade actually, if a stop loss gets it, you are not losing more than $20. How simple is that, guys? So next time, if you are placing any orders, you know exactly how much money you are losing per trade. And that's very important to understand or to know as a trader. So guys, this is what I actually wanted to share with you in this today's short video. But as I said, right, this video is very informative and you have to understand this with the stop loss and with all this risk management strategy. Okay, but before we conclude this video, what I also wanted to show you is looking in a bigger picture in a weekly time frame. As you can see, in an upper trend we are seeing a flag, or you can also call it a wedge. So in a bigger picture, if Bitcoin actually comes around this particular area, which is 5,300, where we might see Bitcoin coming, right? And here, let's say when Bitcoin is around this particular area, this is the most important area for Bitcoin then. Why? Because this flag is actually getting tighter and tighter. So now if the price actually comes around this particular area 8,000 and breaks this line, this is an indication of a pure breakout. If it breaks below, then this is also an indication of a pure breaking down in a downward direction. So this might be very huge. So that's why also to have a bigger picture is very, very important. So as you see, right, I have shown you in a pretty like easy example how many like downward channel or upward channel or sideways channel you can see in a simple chart. This is very, very important to understand. Even if you are looking in a bigger, on this particular area, you can see this here is upper trend line. This here is the downward trend line, like for the downward channel. So what we can also expect in a bigger channel, if the price actually goes in a downward direction, we can see correction around this particular area, right? Around 5,000, even worst case, I said 4,000 area, then we might go around this resistance area from a falling wedge, right? Or the falling channel. So this is very, very interesting right now. So guys, this is what I actually wanted to share. Smash the like button if you learned something from this video. That will mean a lot, guys. Thank you very much one more time, and bye bye until next time.